All right, here we go. Good morning, everyone. It is Tuesday, the 21st of, February. And yes, I'm in a hotel room out in Phoenix, gonna rush out of here, try to beat a blizzard that's going to hit Salt Lake City today. And because of that reason, my travels have been slowed a little bit. I am not able to do the webinar tonight. Hence, I'm making a recording, so we're going to be good to go. Today, I want to just comment on a couple questions you guys have had. And so I'm going to do this all encompassing. What about Baidu? And so a couple of you asked, I can't believe we're in it. It's China. Some of you have used the Kevin, you're conservative and you don't trust those Chinese. What are you doing? What about Baidu? Because it is a significant portion of accounts. So just a couple points, right? First, we are in Baidu because of a long-standing, how do I say this? A long-standing track record of making money. So that's why we are in Baidu for that reason. It is my number one stock that I have made the most money in my investing career has been made in Baidu. It also, just in general, second reason, it diversifies. And I know you guys are going to say, well, Kevin, you're not a big diversifying kind of guy. What do you mean? It diversifies our portfolios to the second largest economy in the world. We used to do the FTSE, the FTSE. We used to be doing the FTSE for a while because that was the European, how would I say this? The European index that we could be invested into European assets and so forth. But for me, we're invited because of the long-standing track record of making money, and it's been a huge amount of money. I've made more money in Baidu than any other position. That includes Apple, that includes Nvidia. Second, it diversifies our portfolio into the largest economy in the world. And for those of you that don't know, Baidu is the Google of China, and I'm going to put a comma there, with six other, I'm going to call them profit legs. It has AI, it works with Apple. I mean, it has 6 or 7 different profit legs. A lot of people have asked, well, why not Alibaba, the Amazon of China? And really, it's because their fundamentals suck, just like Amazon's. But more importantly, Baidu owns 30% of Alibaba. So it's touching base with Alibaba, IQ, so it's like in the Netflix of it. It's got reaching profit legs into different areas that make it a great index of China to see how China's really doing. Now, earnings. Earnings are tomorrow morning. And someone asked from morning, that's before the market opens. So anything we do on Baidu, we need to do today. I'm going to pull up really quickly our Baidu position, and I'm going to highlight them because we have 2.2 million basically out of 16. It's an eighth of our portfolio. And currently, we have 350,000 roughly of 160, 160 long puts. We have the right to sell Baidu at 160, even though it's trading at 140. We can sell it, and I'm going to use a pen color. Actually, I'm going to use a pen instead of this. Let's choose a pen color. Let's choose green. Even though it's trading at 140, we still have the right to sell it. Not there, right here, out to March 17th at 160. What we paid $11.96 is now worth 22. So we've basically made $11 on the way down. We're going to make a change. We're going to make an adjustment. We're going to roll these 160s down to 140. That is called protecting at the money. We're going to protect this stock at the money, or at the current price that it's currently trading at, which is $140.05.6. We're going to capture $11 of profit, or roughly $180,000 we're going to capture a profit on Baidu. A lot of people have asked, Kevin, why do you do this? Because if Baidu was to move from 140 up to 160, because of this protection position right here, we would basically lose 80 cents on the dollar on the way up. We just won't make anything on the way up between 140 to 180. Excuse me, 140 to 160. So what we do is we capture our profits, we put protection on, little bit of luck, that'll bounce higher to 160, and we'll make another nice chunk of change on the way up. Baidu has been trading. If I was to bring up a chart, little technical analysis review here, right? Google L. We adjusted some Google positions for people that are in Google today. Baidu right now has a range that it's trading in. Pretty neat range. In fact, I'm going to go ahead, I'm going to annotate this because I like their stuff that they offer us. If I was to take a look at Baidu, I could draw a pretty good line right at 140. And then I could draw a couple other lines. 160 obviously is one that it hit. More importantly, draw a thinner one here. 155 seems to be where it hit a couple times and came back down, right? When I say hit a couple times, hit it here, gap down, did the 160, tried to hold the 155, gap down, hit the 155 and gap down. These three touches up here are forming either a head and shoulder pattern or a triple top, but you just don't know. If it bounces to test it again for a quadruple top, I want to make money on the way up. I love that we've got protection down here at the 50-day simple moving average at 131 and at the 200-day simple moving average at 125. So as I'm looking at why I'm taking protection off and adding it or lowering it to at the money at the 140 price, I've got $9 to the downside or $15 to the downside of risk, but I've got $20 to the upside. So, common thing that we do, we cash in those profits. We're going to take a lot of profit. We're going to spend some money and add protection at 140. And we're going to go through earnings tomorrow morning. China's opening up. China's opening up after COVID. It is our belief that there is a huge pent-up demand, and I don't know if that's how you want to spell it, pent-up demand of, I'm going to call it money to be spent in China because they've been cooped up. Their middle class has cash to spend. They just have been, through a communist regime, not able to get out. So here we are. That's what we're working on today. We're going to be having earnings tomorrow, and we're going to be basically running off with an opportunity to hopefully get a big return tomorrow due to China. Nice little diversification. In fact, it used to be for years when you heard that sell in May and go away, that sell in May go away comment was, hey, we can't make any money in summer. Well, Baidu and the China economy made all kinds of money in a US summer. It was the perfect position to be in to make money as US markets in summer went sideways to down. That sell in May go away as if you don't know what to do to be able to make money in the stock market during summer. Baidu is how we counteracted that, and it was one of the beneficial, or one of the positions that could make money during a US economy during summer. All right, so that was the question on Baidu, and they did have its earnings today. Another question. We seem to be cash heavy. And what we mean, again, we've got $16 million right here. And these ones, this is you guys for the most part, $1,870,000 in cash. That will go to 2 as we take our profits on Baidu. So 2 out of 18, 1/8, we are 12.5% in cash. The reality is we have large cash positions right now that are protection that we can cash in. And the short answer is we're going to go to probably even more cash into accounts and more cash heavy as we get through our time frame between now and April 15th or taxes. We are cash heavy because we keep making money on puts. And when you keep making money on puts, it increases the cash. Kevin, why would you not just put that into new shares? And again, the reason why we're not putting into new shares, JP Morgan has puts on them. We're good there. Visa has puts. Where's Disney? Disney has a good amount of money in puts, I'm sure. 156,000. So the question was asked, why are we cash heavy? And the short answer is because we are making profits on puts. And for those of you that don't know, puts are what we call stock ownership, right? It's stock ownership insurance. So we capture that profit. We are not adding more shares until we feel like we have a bottom. So someone once asked, well, don't you just add them on in? Well, that's what you do, but it doesn't make sense to keep adding them in when we have a bearish market and bearish movement on the indexes. let me move to, here's the S&P 500. We might add some shares in general if we see the 50-day and the 200-day hold. If it breaks, which is my expectation, we're going to be down to 3,800. We were at 4126 3 days ago. We have dropped down basically 110 points. What, 2.5%, 3%? Pretty darn quickly. If anyone was to ask me what fundamental reason did our market have to go up in January, we don't have one. New money coming into the market. I don't think Keeve and I did a really good job of explaining what was going on. It didn't make a lot of sense, but we ran it through November, in all honesty. Good protection up in December, made some profit. We've had good protection through earnings. I do find this interesting. If we look at February, I guess the last trading day is probably right in here, right? I said we're going to be up 2% in February. We're probably going to hit down, maybe come back up before we really go lower. We're probably going to have a pretty flat February, even though we were up 2.5%, almost 3% at one point in time. Something else to notice, 1, 2, we've got 3 down weeks in a row on the S&P 500. A little oversold, but we've been oversold for a lot of time, right? Been oversold for a lot of time. So there are some things to be looking for. Crossover, if we had an EMA, a 5 and a 20, a 15 and a 30, 9 and a 20, crossover here. We are technically bearish now on our S&P 500. It was a 3-week process. But yes, we're technically bearish on the S&P. If we look at the Dow, same exact thing. We are bearish on the Dow Jones Industrial Average. Big day though, we are breaking the 50-day. On these 31 stocks, we're breaking the 50-day. No one really watches the Dow. It's what I like to call a TV index. They match it a lot. They talk about it on the TV. No one really trades it per se. But for us, this is Disney. This is Boeing. This is Ford. Our expectation is to see that come down and probably test the 200, hopefully bounce up, but I don't know where the pent-up demand is for U.S. equities at this time. And then our best index, the NASDAQ, that's why we are investing in Meta, in Apple, Google, Baidu falls into this category. It's taken a huge hit. Fabulous run in January, right? Let's face it, boom, great run. But in February, we're giving some back. It is not technically crossed over. We do have it here. I'm sure we have an EMA crossover here somewhere. But big money has been betting on technology. In fact, I've got an article. I'm not eating a little bit of bacon right now. I've got an article that talks about how hedge funds are moving into technology. they're counting a rebound this year for hedge funds to move back into technology. So how would I say this? You've heard me say it before. I'm sticking by it. I know I looked kind of ridiculous in January. We probably have a tough 6 months, and the gains are going to come on the back end of the year. We're going to hear the minutes this week. We're going to hear the FOMC minutes. As we hear the FOMC minutes on Wednesday, I've got that listed right here. We're probably going to find out we're going to have a March, a May, and maybe a June rate hike. We probably will have 3 more rate hikes. I was expecting 50 basis points. Don't be surprised to hear that they want to do a 50 basis point rate hike to try to tame inflation. The question is the Federal Open Market Committee correct? Is Powell correct that it's a smart thing to do to raise rates into a slowing economy to tame inflation when the inflation is supply and demand driven? It's not price driven per se. And you're going to ask yourself, what's the difference there? It's really just supply and demand. We can fix the supply and demand. We're going to be fine. We won't have the inflationary pressures. And it'll be interesting to see where we end up. But this week, existing home sales today, a little light, 4 million versus the 4.12 million. FOMC minutes will move our markets tomorrow. GDP could be the bright spot, believe it or not. I don't know how we're going to have a huge positive GDP month over month, but GDP could be our bright spot for Thursday. PCE prices, which are inflation, personal income, personal spending, new home sales will most likely be down, which the market's got to figure out is good bad or is bad good. If we have less income, less personal spending, will that affect the decision process on the Federal Open Market Committee? My answer is no. They pay less attention to this than to CPI and PPI numbers, real inflation. Well, Kevin, I thought PEC pricing was real inflation. It is. It's one of the metrics that they look at, but they're looking at the cost of goods, and it's a scary sight out there is what I'm going to tell you. Earnings this week. Monday, the market was closed. Home Depot, Coors, Walmart today, Coinbase, which should be awful, Palo Alto Networks, Toll Brothers, Rig. I have Rig in here. In fact, someone asked me recently, why do you follow Rig? Kevin, Rig is like not all that important. And I get it. I agree. Rig is one of those sentimental ones. I watched Rig go down from like $50 to $2.33, it looks like. It's had a great run this year. It technically is a penny stock. An 11 million volume penny stock is what it is. But I followed it because it seems to be an interesting, offshore drilling seems to be an interesting canary in the coal mine for oil. I don't know how to tell it to you other than I watch it because I find it interesting. I watch it because I'm always looking for abnormalities or relationships between markets and stocks and industries and sectors. And it's just one that I don't actively trade because it's a penny stock, but it is one that I do actively follow to try to see where offshore drilling is, how many rigs are out there, what's producing or being shut down. It gives me an idea of what we're seeing in our oil prices. And if someday I'm ever going to really get into oil, make it a core holding. I just don't see it right now. All right. February, I'm going to say it's up one. You know what? I'm going to change that. I'm going to change February. That's probably going to be down. I will put the briefing, the Y charts in here. We're going to be lower for the week. Bearish, bearish. Technically, we're still bullish on the NASDAQ. I went through earnings, went through economic reports. I had a couple things that I thought were pretty darn interesting that I wanted to just bring up to have you guys really tell me what you think. That's the short answer. What do you guys think? I had no idea what a Volmageddon was, but as I read through this, JP Morgan is flashing a huge warning on short-term options and volumes. When I'm saying a short-term option, I'm saying trading an option that is a week or less. One of the biggest things that's happened in our markets are these short-term, 1 week options that we now have the ability to use. It used to be more on a monthly basis, but they're running weekly options on certain stocks, kind of like they did fractional options. Remember they used to do like, hey, you could do mini options. You don't see very many mini options anymore, probably because people got their butts handed to them that we're using these options like gambling. Hey, for 1 week, I've got the opportunity to go black or white or, double zeros. And people have had their butts handed to them. All JP Morgan is trying to say here is that, hey, on weekly options and weekly option trades, it's basically day trading. It's day trading with options. Most people don't understand the pricing in an option, the volatility, volatility crush, beta, gamma, delta. People have been using these options, these weekly short-term cheap options, to try to make it big. And in general, they've been losing their butt on it, right? They have been getting their butts handed to them. And because of that, first, JP Morgan's basically said, hey guys, you should probably stop doing this. Day trading options, even though it's a weekly buy and sell period, it's too quick. A lot of people have asked us, Kevin, can you do all these strategies that you talk about on the futures market? Yes, you can. The problem is it's just too quick. It's just too hard. So we don't. Goldman Sachs, hey, we're looking at a harder landing than we expected. Here's some soft landing stock picks: Tesla, Garmin, Mach Industries, top build. Here's some hard landing. They're telling you there's some stocks that are not going to do well. Home Depot and Lowe's. Home Depot had their earnings today. Awful. They're down 5%, I believe. People are not back to that COVID, I'm going to do it myself. We can't have people coming into my house to fix it. Home Depot did not do really good. It's going to be a hard landing for Home Depot. Lowe's, who is the little brother to Home Depot, home improvement, probably the same thing's going to happen to it as well. Just something to keep in mind as you're picking your stocks. High value hedge funds dive back into beaten down tech stocks. This is the article that I was going to show you. I love seeing Meta Platforms up today. Market down 1.67% on the S&P. Meta is still up. And that's kind of nice, because if the market's down 0.67, for you guys, we are down 0.79. We're doing twice as good as the market is today. Let's update that so we get a more accurate 0.72. We're beating the market handily today. We're doing twice as good, and the market's doing twice as bad as we are today, which is where I like to see us, right? All right, what else do I have for you? Joe Biden makes a surprise visit to Kyiv. Let's see if he's going to give them weapons. Germany is. I mentioned this a couple of weeks ago. Shocking to see he was there. I don't know what protection he had. I don't know what promises he had. But let's see if we can sell them some of our older missiles and bullets and see what they do. Retailers could face cost cuts and slower sales this year. I mean, I think the whole article is ridiculous. But if you're in a recession, your money doesn't go as far. Yes, retail, consumer discretionary, where we have the discretion if we need it or not, usually gets hit first. Of course, we're expecting that. And that's all I have for you this week. I'm going to get this up and posted. Guys, I appreciate you being here. Look forward to seeing you next week, and Key will be with you on Thursday. If there are any questions, email me, khurley@hurleyinvestments.com. K for Kevin. khurley@hurleyinvestments.com. We'll get this posted for you guys. Have a great day, and we'll talk to you soon. Bye-bye.